Digital wallets, these are the new bank branches in our pockets or in our handbags. And we believe they're going to scale. They're in the process of scaling now. Here in the United States, it's Cash App and Venmo primarily. Of course, we've seen WeChat Pay, and Alipay scale in China. So we were a little more developed and had good financial rails, which China did not. So they led the charge into this space. Again, the coronavirus has turbocharged it. The reason this is happening is not just because we're dealing with contactless payments. So, we don't have to worry about the virus with digital wallets, whereas we do with credit cards and debit cards. I think they actually are more virulent in terms of spreading the virus than cash itself. So digital wallets have gotten a booster here, and their cost of customer acquisition is a fraction of that of traditional banks. $20 versus anywhere from $150 to $1,500. And the reason banks were willing to pay so much is their customers were so loyal. Well, we think that's about to change and that banks are in trouble. And we think that the valuation of these digital wallets is going to scale enormously during the next 5 to 10 years. So today, you can see here on this chart, Venmo and Cash App are valued in the marketplace at roughly between $250 and $700 per user. And we see that we believe if they capture the share of banking business, brokerage business, insurance, we see that they could scale to nearly $20,000 per customer. Now, what we've included in this big ideas that we did not last year was 10,000 of that, roughly, will come from e-commerce. If you study WeChat Pay, you'll see that half of the time spent on WeChat Pay is in payments and then half in e-commerce. So again, another big opportunity that we really hadn't taken into enough account last year when we did big ideas. Bitcoin, more in the fintech realm. We are seeing corporations, we didn't expect this. We expected institutional interest, but we didn't expect corporations to substitute Bitcoin for cash. MicroStrategy was the first. All of its cash is now in Bitcoin. And in fact, it did an offering so that it could buy more Bitcoin. It is a technology company. I'm a little suspicious. I don't know what the SEC is going to do with this because this is not its base business. This is its cash. Square has put 5% of its assets into Bitcoin. And we're seeing more mature companies like PayPal enabling the buying and selling of Bitcoin on its platform, as Cash App does as well. Well, if companies in the S&P 500 were to put 1% of their cash into Bitcoin, that would increase the price of Bitcoin by $40,000. Today, it's close to $30,000. So that's more than a double right there. If we saw 10%, of course, that would add 400,000. And I just told you, MicroStrategy has put all of its cash in. Perhaps emerging markets will be faster in terms of adoption. But we have been very surprised at how quickly this has happened in the United States. Institutions are going to have a significant impact on Bitcoin's price. We're seeing all kinds of evidence today. I just gave you some about corporate cash, but we have the OCC before Brian Brooks departed. In last July, they allowed custody banks to federally chartered banks to custody Bitcoin. And just within the last month, they have allowed banks to actually become nodes on any public blockchain so that they can enable much less expensive and efficient settlement. So that is again a little faster than we would have expected. We've seen Fidelity. The infrastructure has certainly been moving into place for a while. Fidelity, the Intercontinental ICE, the Intercontinental Exchange, the CME, and Cambridge. The consultant wrote a paper about, it was a little more than a year ago, basically telling institutions, hey, this could be a new asset class. And it has a very low correlation. In fact, it has the lowest correlation if you compare Bitcoin with all the other major asset classes out there. It has the lowest correlations of any other combination. So we believe that here you can see that if our analysis on how institutions will look at allocating to this space is correct, and this is using a Monte Carlo simulation, institutional involvement could increase the price of Bitcoin. Again, it's 30,000 now, by 200,000 if they want to minimize volatility, to 500,000 if they want to maximize their Sharpe ratios. So quite a bit of work. Yassine El-Mandra, our analyst, has 2 white papers. And I should mention, all of our analysts have white papers, more extensive white papers on our site, and most of these